Well, those are the headlines that we're tracking at this hour. I'm Shereen Bhan, and you're watching a special edition of the CNBC-TV18 CII CEO Centimeter, where we periodically speak to CEOs across India Inc. to gauge how they see the economic recovery playing out and what they expect in terms of headwinds and tailwinds. The festive season is upon us, and this is probably the most crucial period for the economy, which is attempting to bounce back from the COVID-19 jolt. So what is the mood across India Inc.? CNBC-TV18, in partnership with the Confederation of Indian Industry, conducted a poll among 303 CEOs to gauge the pulse of businesses. Majority of these CEOs run small and medium enterprises, and one of the key findings of the poll was that only 10% of the CEOs polled felt that the stimulus measures announced by the government so far were adequate. Now, we must add here that this poll was conducted 2 weeks ago, and as if on cue, the government has announced 12 measures to the tune of 1.2 lakh crore rupees today to bolster the economy. As CNBC-TV18 has been reporting, these measures are targeted at hand-holding key stress sectors of the economy through a revival. These include a new version of the emergency credit guarantee scheme for companies with dues between 50 to 500 crore rupees. Many restrictions, including an upper ceiling on turnover, have been done away with. There is some income tax relief for the real estate sector. Government has increased the differential between circle rate and the agreement value to 20% for units up to 2 crore rupees. There are 10 more announcements, and we'll discuss them. But first, let's focus on our CEO poll. Here are some of the more interesting findings. A majority, that's 52% CEOs, say the economic recovery in India is well entrenched, but 48% seem to think otherwise. Only 25% CEOs believe the recovery has been above expectations. 35% believe it's been below expectations. A majority of nearly 40% said the recovery is in line with expectations. Now, what is the state of business operations? Nearly 14% said business is completely normal. A majority of nearly 38% said they believe there is still some way to go. 37% said operations are near normal, and just under 12% believe that there is still a long way to go. What is the attitude of CEOs towards hiring? A majority, 70%, are in wait and watch mode. Over 24% CEOs are upbeat about hiring. When asked about China, an overwhelming majority of 72% said that they are reducing the exposure to China. Will working from home become the norm? Over 24% said that they will institutionalize work from home. Another 22% are still thinking about it, but a majority of over 53% are not looking to institutionalize work from home. And finally, will India Inc. provide free COVID vaccines to employees? Over 32% said yes. Nearly 49% CEOs have promised to subsidize the cost of vaccines. So those are just some of the interesting highlights of the poll conducted to gauge the mood across India Inc. To take this conversation forward, I'm joined now by Seshagiri Rao, the Joint Managing Director and Group CFO of JSW Steel and the Chairman of Steel at CII's National Committee, Piroz Kambata, the Chairman of the Ease of Doing Business at CII's Task Force and the Chairman and MD of Rasna. We also have with us Mazin Shroff, member of the CII National Retail Committee and the MD of Eureka Forbes. And finally, Neelanjan Banerjee, the co-chairman of Chemical and Petrochemicals at CII. He's also the vice chairman and MD of Lanxess India. Gentlemen, many thanks for joining us here on CNBC TV18. Mr. Rao, the first question to you. This poll was conducted before Atmanirbhar 3.0, the package that the finance minister announced today. Now, when we asked CEOs if the stimulus measures announced by the government were adequate, just 10% felt that they were adequate. A large majority felt that the stimulus measures announced by the government so far were not adequate. In light of what has been announced this afternoon, Mr. Rao, do you believe the mood is likely to change significantly?
In my view, the mood will change, particularly for boost to manufacturing in the form of PLI scheme, Production Linked Incentive Scheme, to 10 champion sectors, I think is a transformational measure. So it will not only reduce imports, but also potential industries can do exports and meet the domestic demand. So this will definitely change the mode of the manufacturing sector. Over and above that, the other measures which are targeted towards farmers, towards urban infrastructure, they're all very good measures in my view that will change the mood.
Okay, you believe that the mood will change, but from what was announced by the finance minister today, Mr. Rao, I would say that the top 3 announcements out of the 12 announcements that came in, one was, of course, the expansion of the credit guarantee scheme to now look at the 26 stress sectors identified by the Kamath Committee, as well as the income tax relief to developers and home buyers. Would you say that those 2 measures will significantly change the economic reality?
No, the urban infrastructure where there is definitely a demand for cement and steel and other building materials, plus providing employment to various people, the special benefit of the 24% to be borne by the government. These are all very good in terms of creating employment and also in terms of bring back the mood.
Okay, they will bring back the mood. Firoz Kambata, let me ask you, 52% CEOs say that economic recovery is well entrenched, 48% think otherwise, 40% say that the recovery is largely in line with expectations. Which camp do you fit into, Firoz? And more importantly, in light of the measures announced yesterday, the PLI measures that Mr. Rao was also talking about, food processing is a sector that will also fall under the PLI scheme. What's the mood?
The mood is quite upbeat on the PLI front, which I'll take first, because I think PLI was something which I have been pushing for because I was part of this champion sector since long. The only issue is that the PLI should be such that even the small and medium should get benefit. In mobiles and some other things, medical devices, they gave to 5 and 10 companies, but I'm very hopeful that in food processing, they will not limit and they will probably give to all because we want more and more people to come in this scheme. And I believe that there is another thing which is announced, which I was just reading, which is the PF and ESI for new employees now is going to be borne by the government. It's a very big number of roughly 20-25%. And I believe in food processing is very, labor intensive. My understanding is that this is a very good thing. It should have been done 6 months back because irrespective of new or old, if the paycheck protection is not coming, at least the social security part should be borne by the government in the time of COVID. So that is a very good news in my personal opinion. And now I want to couple it with the farm bills because I think the whole package is incomplete without the farm bills. So ensuring that the labor PF ESI is taken care of, ensuring PLI comes so that there is an incentive scheme, and the farm bills tell you that you can directly buy from the farmer very easily. You can ensure there is no middleman. Contract farming is legal. So whole thing, I think if you see the whole package as this, the way I am trying to show, it is a very good package from what I call farm to the plate. As regards the business confidence is concerned, I hope we were the stock market because the stock market confidence seems to be more than the business owner's confidence. So I think we should take some learning from your every evening series on the stock market because I believe the bulls on your channel are the most optimistic about the economy. I hope the CEOs also were equally optimistic. But having said that, in this survey, what is very important is... Please go ahead.
Yeah, go ahead, Firoz.
So the point is that at least the bulls are more optimistic than us. But at least in this survey, one hidden thing is that 60% of the people are very hopeful that the next FY the sales will be more than 10%, which is a good number, which is higher than the GDP projections. And almost 70-80% believe that their profit line will have a robust improvement. I think which is also very good news. And I think now that this package has been announced, CII should be doing another round of survey, not now, but after the actual implementation of these announcements, maybe in 2 and 3 months. I personally believe if the implementation is correct, the actual results will be much better. This is my way I look at it.
Well, that's a very comprehensive take on some of the significant measures that have been announced by the government and the impact. And you're right. We will have to revisit this poll and we will have to check whether the mood has changed on the back of what has been not just announced, but what will be implemented as well. Mazen Shroff, let me ask you to the point that was being made there by Firoz, and this is what the survey highlights. Over 47% expect a 10 to 25% top line increase in FY22. Over 52% CEOs see margins rise under 10% in FY22. What's the mood like as far as the manufacturing sector is concerned in light of the measures announced between yesterday and this afternoon?
I think there are some stops which have been given
Mazen,
to
can you hear me?
Consumer electronic sector. They've been stops that have been given to the... I can hear you. Can you hear me?
Yes, I can. Go ahead.
Sorry. So I was saying that there are some shops announced to the electronic sector, some shops been announced to the white goods sector, which is good. And I think there's going to be a lot of movement in the mood as well. The stimulus in terms of the the overall buoyancy of retail outlets right now. If one walks down the street, one sees a lot of people in stores. So there is a lot of good mood which is going on right now. The expectation is that this mood should continue. The expectation is that this is more or less sustained. So about 65 to 65% said that this is going to be sustained. And 35% said that the current situation is slightly below their expectations. But I guess that depends on which sector you belong to. So consumer electronics is doing really well. White goods is coming back into thing. But if you're in the clothing or the garment business,
Mazen, we have you on a poor line. We're going to try and reconnect with you so that we can clear that audio that is patchy at this point in time. But let me talk about some of the other interesting aspects that Mazen was alluding to. 85% have flagged the lack of demand and liquidity as big threats. Let me go back to our CEOs now who are part of our panel. And let me get Nilanjan to comment on that. Nilanjan, lack of demand, 43% believe that is the biggest threat to recovery. Lack of liquidity, 42% believe that is the biggest threat to recovery. How do you read this? I mean, banks are awash with funds at this point in time. So why does liquidity continue to be a challenge? I would imagine that, yes, demand in some sectors is uncertain, but in some sectors, we're seeing demand coming back quite strongly. Why is liquidity such a concern?
Well, I think, the way I see it, we've seen a lot of traction in demand in a lot of end application segments. And I think, it's a lot of data out there regarding the bounce back, be it the automotive industry or, the paints and coatings industry, and a lot of end application segments where we see a lot of traction in demand, especially after the fall during the lockdown period. So I think one of the main concerns, as you rightly pointed out, was in the minds of CEOs was demand, and continues to be demand, because I think we really need to check whether the demand is here to stay or this is really pent up demand. While a lot of the actions announced by the government, be it the PLI schemes or the announcements made by the finance minister earlier today, are highly welcomed by the industry, and I think that they will go some way. But let's also be clear that we are still not out of this pandemic, and a lot to do with topics, the manner in which industry is running will be inversely proportional to the pandemic curve. I think we are, a lot of industries still having a lot of export demand, and I see that, certain countries, of course, in the Western world, including Europe and the US, are still seeing a lot of topics around COVID-19. So I think unless we get a solution there, I think we will have to see in the next quarters as to how the demand stays. I think the whole topic around liquidity has primarily come out of the lockdown period and working capital cycles being badly impacted. And I think a lot of industries and companies have got cautious around their capex cycles, because at this particular point in time, what is primarily, of course, in the minds of all CEOs is also managing cash, and of course, capex cycles there very, very important. So we will have to wait and watch and see how that goes. As far as the industry is concerned,
yes,
I think,
speaking of waiting and watching, you're right in pointing out to some of those uncertainties. But I said, go ahead, Nilanjan.
Yeah, I think there's, as far as the chemical industry is concerned, we see a lot of traction, especially out of the demand shift out of China. So there is a lot of agrochemical companies out there, and of course the pharmaceutical, the backward integration, a lot of imports of key raw materials that are happening from China, getting a replacement with all the government push in the Indian market as well. So we do see a lot of traction as far as the chemical industry is concerned, and that's a little different to the rest of the industry. You would have also noticed a lot of IPOs already announced in the chemical industry in this really rough cycle of business. And of course, several companies, again, planning to go public in the next quarter or so. So I would say that's slightly different to certain other segments. Yeah.
Absolutely. It has been identified as one of the sectors, and it is likely a likely beneficiary of the China Plus One strategy that is playing out. But Mr. Rao, let me come back to you. As Nilanjan was pointing out, the mood across large parts of corporate India continues to be wait and watch. When we talked about hiring, 70% of CEOs say that they are still in wait and watch mode. What about investing, sir? Do you feel that given where demand is, given the uncertainty of both the domestic market as well as the global market, we're anywhere close to private investment picking up?
Private sector investment to come back may take a little more time because the existing capacities which are there today, they have to be first utilized fully. So capacity utilization, many of the CEOs are pointing out that they are very close to the pre-COVID levels. Still there is some gap. So I think this year, until the demand really picks up and the liquidity, particularly credit flow, starts coming in from banking system, this year I think the existing capacities will get exhausted. After that, I think next year you will see again private sector coming back and creating new capacities. Other than the PLI scheme that would bring in new investment in these sectors, because those products which are coming out of the PLI scheme are intended specialty products which will go into either to replace imports or to encourage exports. So those kind of investments may happen in this year, and next year I feel private sector investments will accelerate.
Okay, so it could take at least another year, but perhaps the experience will be different for those sectors that are likely to benefit from the PLI schemes that have been announced. Piros Kambata, let me come back to you now. And, you know, since you brought up the issue of the agri scheme as part of this comprehensive package that you believe is a mood changer and a game changer, you know, if I take a look at the poll, it's a mixed response. A significant number, almost 41%, say that they don't know, they can't say if farm bills will benefit Indian agriculture. So do you believe that a lot more will need to be done on the communication side to really explain how this is going to work and what benefits it may accrue?
See, I think first let us salute the government that they have made it into a central act. And I was always part of this exercise of farm bill reforms, and probably 10 years back, I have been suggesting this. And actually, many states did it bit and pieces. First time some government at the central level has taken the political sort of courage to do it. And I somehow believe people of the country, right from the farmer to the industrialist to everybody, should support it, because this is the thing we were waiting from the 90s. The liberalization of the 90s changed the landscape of industrial India. People had little doubts. Now nobody has a doubt. The IT industry changed the way banks work. These farm bills have to change the way agriculture works. Let us give the poor farmer a chance to really now come up. And I think this is what the farm bills are. This survey, 40% people are saying can't say, is because they are not very sure when the implementation will start. Some states are saying we won't allow. Now, what is this? The same states which were earlier saying we want it, they are saying we won't allow. So I think many economic reforms, let us be very clear, should be outside what I call political thing. It is for the benefit of the people. And this is a very clear thing that if I am able to get a crop directly from the farmer, giving my technology, I am able to finance it. Why do I need the middleman, and why should I pay the money? And then honestly speaking, what is wrong in it? If a bill says, and nobody is forcing anybody not to go to the mandi. If a farmer says, no, Mr. Kapat, I don't want to give it to you, you go and buy there. It's an open market. And today they are saying everything is on the net, and anybody can have an app. He can decide what price he wants to buy or sell. He may not want to sell to me. He may want to sell a farmer in Maharashtra, he can do that. Or a company in Maharashtra, he can do that. So I think this whole thing unnecessary is getting political. That's why 40% people have said no. Otherwise, 100% of industry is supporting the bills. And this is the right way to do it. And honestly speaking, 40% is because of the uncertainty because of this. But let somebody has to say this is wrong. And I'm saying this upfront, it is wrong, because actually this will benefit. It is like people who are crying, industrial liberalization happened, what will happen? My company will get shut off. I'm from food industry. 100% FDI was announced in 90s. A lot of people told me, Mr. Kambata, sell off. I said, no, we have grown 10 times. Where is the question? It's also without any funds from any stock market or finance or bank or PE fund for that matter. Zero investment from anybody. We have grown. So honestly speaking, there's a huge opportunity. And I see now your second part of the question is, and this was possibly what you're wanting, is that is investment going to come? My answer is yes. Because now time has come for private industry to invest in the rural backdrop. I think it is wrong to invest only in retail. The whole country is looking, I'll set up a retail shop. Please don't do that. There is no money in that. You'll never make money at the cost of real estate. If you want, you invest in infrastructure in the rural village. There is where the money will come and you will make money. And I think companies are realizing that.
Well,
companies are talking of primary processing centers investment.
And I hope they're listening to you. I hope they're listening to you as well. But Mazen, let me get you back in on the conversation. It's interesting. We asked people as part of the poll that would work from home be institutionalized, and clearly a large majority doesn't believe that it should be institutionalized. And also in terms of dealing with the pandemic, as and when a vaccine is made available, the expectation is perhaps early next year, or the hope is early next year. About 32% say that the company will either provide the COVID vaccine free of cost. 81% of companies that we polled said they will provide subsidized COVID vaccines. Mazen, what do you make of that?
I think India Inc. has realized one thing absolutely critical for and then the awareness of health today is far greater than anywhere else. Every meeting in our company starts by giving a count of how many active COVID cases we have, how many have recovered, and how many are, still in position. So I think this whole situation has turned around a lot. The work from home depends on which category, which industry, which segment you belong. A lot of the retail people have to be in retail stores. And you must remember that half the people interviewed in the CII poll have a turnover of less than 100 crores. So depending on who is being polled in which segment they are, the work from home would apply that way. But it was interesting to see that CEOs themselves, about 60% of them said that they prefer to work from the office mostly and slightly from home, as opposed to 30% who work slightly from home and mostly from the office. So I guess India Inc. is leading from the front and driving things right up there.
Absolutely. Nilanjan, finally, FY22 real GDP growth estimate, 63% believe it'll be between 6 and 8%, 29% believe it'll be between 8 to 10%. What are the key risks? What are the key challenges? And especially in light of everything that's been announced in the last 24 hours or so, do you believe the opportunities are now starting to outweigh the key risks?
I think that, currently several sectors are seeing a bounce back in this quarter. I think a lot of consumption also led by the festive season. I think we will have to see how that traction in demand continues, because I think as far as, relating also to the previous question that you asked, a lot of capex cycles, of course, by several sectors and companies are essentially on hold because of lower asset utilization. So I think that demand pick up and, for the demand to stay on that level, of course, will decide a lot of topics. I think with the change in regulations in quite a few sectors like the automotive industry, especially with respect to the, BS4 moving to the BS6, etc., there was already a lot of postponement of purchase of vehicles, etc. And now we see a real pent-up demand happening over there. But, across end application segments, we see currently pretty healthy demand. And of course, it's also to do a little bit with the kind of infection rates in the urban areas in India. We see, of course, a current situation, picking up in place like New Delhi, etc. We just keep fingers crossed that, the economy keeps running and that we're open and are not forced to go into lockdowns as some of the more advanced Western countries are moving into. So I think a lot will depend also on, the export growth will also depend on the pandemic curve in these countries, because supply chains and operations have to keep running. Because we also see at the moment a little bit of supply chains getting disrupted from the Western world, especially due to the COVID-19 topic emerging in certain countries like France, Germany, etc.
Yeah,
so
you're right about that. And Mr. Rao,
towards the 8%. I would peg it more towards the 8% and keep my fingers
more
crossed
towards the 8%.
Yeah, and keep fingers crossed that we come out of the
I think everyone on the panel has their fingers crossed.
keep fingers crossed.
Mr. Rao,
that we move
we're
into the
completely
positive
out of time.
side.
Since we were talking about supply chain disruptions, I'll end with the finding. When we asked CEOs whether they are looking at reducing exposure to China, 73% said yes, 28% said no. So do you believe that this is going to continue to be the big theme over the next few years, Mr. Rao?
I fully agree with that. Supply chain realignment is a great opportunity for India, not only in core sectors, but in several sectors. So India has a distinct advantage in terms of overall competitiveness. So with productivity growth going up because of implementation of digital initiatives by the manufacturing sector and other sectors of the economy, I think India has a great opportunity to have this share of supply realignment, which is supply chain realignments. So only only one side this opportunity is available. Only challenge side which I see is who financed this growth. There is definitely a growth. Cost is behind us.
Yeah.
But when this growth is to be financed, we should have a very, very strong financial sector to finance this growth. I think that is what the challenge I'm seeing. Otherwise, I don't find any problem in terms of growth.
Well, the worst is behind us. At least that seems to be the indication coming in from the CNBC-TV18 CII CEO Centimeter, Sheshagri Rao, Piroz Kambata, Marzin Shroff and Nilanjan Banerjee. Many thanks for joining us here. We will check back in with you. As Piroz said, we will need to keep reviewing the mood for India Inc. in light of the developments that are taking place. And there's plenty of them. But today, thanks very much for joining us to take us through what you make of the Finance Minister's announcements, as well as the mood of India Inc. We take a break. There's a lot more coming up. Don't go anywhere.